The noise of the coffee machine will soon get off and everybody will be in the room. Igor Tomych will talk to you about the banking as a service and core banking. We just started to debate a little bit about core banking and everything, but I do believe here in the back office conference this will be a very interesting topic. Igor.
Yeah, thank you, Davo, for the presentation, and thank you for having me. I'm really pleased to present for you today. And we will go into the discussion, maybe more into details and understanding the abstractions of those things to then better operate with them. So it will take around 40 minutes, and I'm quite open to have the discussion or questions if you will be having after that. So, and a little bit about me. So my name is Igor Tomych, and I think I'm quite fortunate to be the T-shaped person because originally I came from engineering. I started in outsourcing in 2004, and for the last 10 years I'm working quite a lot with the fintechs, different scale. I worked with the NatWest. We helped to spin open banking infrastructure in Bahrain for Tarabut. So as engineer, I have really good technical and deep understanding how certain things are working in reality. Because a lot of things on the market, they put how we would like to perceive them, not how they technically work. And then this ability gives me a really good overview what are the things in their nature and how to work with them. And I'm wearing several hats. So today I'm as a founder of Fintech Garden. We're building the community which helps to understand certain things in fintechs. Also, I'm helping Twistle, that's buy now, pay later platform in Czech Republic. And also I'm running the company DashDevs, which is fintech company having its own product for the fintechs and the services. So I have quite a lot of experience in different angles, and today I would like to present you certain observations that I've done through my expertise. And let's start with the history, because when we understand the nature of the things, then it's easier to operate, it's easier to put them into correct places and understand how actually it works in the deep level. And we will start a little bit with the history with the mid-age Europe and understanding that we've been dealing with the financial services or fintechs for centuries. With the Schumer Imperia, where the writing has been invented, everything quite developed, and the first writing of the humanity was about the accounting. Like the person is literally were accounting the sheep in the yard and trading. So all the things that we see around us is actually started a long way ago. It's not like we have the banking just for a century or it's digitalized and we have it for 70 years. It's been in our lives for thousands of years. And a lot of things which we see right now is just another reflection and another round with the technology that we have right now. And on this really nice picture by Quentin Mansis, we see the money changer. So the need of operating with the financial and funds has been existed for centuries. And one really important things that I can see on this picture is a red table. It's so easy concept. It used to be called in Italy, in Middle Age Italy, like Venice or Genoa. A lot of people who were dealing with the money, they were operating with a green table, which is called in Italian tabula verde. And actually, that's the first banking. Like people were putting the coins, they were doing the P&L, cash flow, and paying to the workers, building certain castles. And that actually was the first banking. And it's not about just the money changing, it's about tax collection, all the processes that we see right now, and we need to support in our financial institutions as retailer banks, as MEIs, as fintechs. So the history and all the understanding is way back then. So another thing which changed our perception is actually the invention of electrical flashlight. And I'll explain why, because we tend to think that technology and certain things which are bringing us, they change in the nature of the things. But the process of the banking has been the same. We have funds, we have payments, we have movements, we have accounting, collections, everything existed before. But what the flashlight changed, and I think it's really important to grasp this change, is that by doing one small action, we're receiving much more. So before that, if you need to light up something, you can make the fire. You basically change it one physical process to another one. But the difference is, and I think that's one of the points in our history when we dramatically changed our perception of the things. By clicking a button, we're getting the process that was not possible before. Flashlight, it's not a fire, it's electrical process. So we changing the physical process by clicking
to getting something different. And the idea about that is actually we are putting much more results in the same time frame with the less efforts. And that's actually what we see in banking happening right now. When we're talking about core banking systems, banking as a service, it's not about technology. It's not about AWS, cloud, on-premise. It's about how this particular technology is facilitating us to get more in the same time frame or with the less efforts, like money, time, budget, etc., etc. So let's jump into understanding what is the digital product. And the difference between digital financial services and traditional financial services is actually how it's delivered, the accessibility, and the technology involved. And I think that's something that we see right now. It's something unique for the humanity, because before that ability to deliver things digitally, they were not existed. And there is a really good example, which I think really great to grasp, is the evolution of the entertainment. Like, we use theaters on the bazaars for a century ago. People were coming to the bazaars to entertain them, to buy something, and then actually theaters they appeared, and we thought, okay, we can go to special people who are educated to do so, and that's going to be the only way how we can serve entertainment in theaters. But then the cinema appeared, and those people in theaters, they were afraid, like, no one will come to the local theater because why go there? I can go to cinema and see someone performing who is not in the same room as me. And I think that's a good evolution to show that technology is enabling new things and fragmenting. Like, we're not replacing one thing with another. And it can be, with the theater example, can be extended. Like, we have cinema, and then we have cinema with the audio, which once again changed the things. And then we have television. You don't need to go to anywhere. You can basically see someone performing in your living room. And then new technologies coming up once again, like Netflix. You are basically choosing what to see, sitting on your couch, and you're not going to theater, you're not going to cinema, you're not switching on the television. So with this example, we can understand that actually technology is bringing us fragmentation. And certain things, they're not dying, they're evolving. They might have lesser niche, but they have all their own customers. And actually, we see how to benefit in specific niche. So it's all about the digital products. I don't think that actually certain things will vanish. I think branches will exist. The mobile phones will have own niche. Web banking also will have new niche, but we will have new niches because I think the technology will evolve more. We will have more device standards and types, and we will learn how to utilize them. So digitalization is not about utilizing just mobile phones. It's about bringing the experience to the places and ability to use those products where it was not possible before. So, jumping into our topics, what is the banking service? And I think here we need to understand that actually the difference is a financial model, because how the core banking systems are put on the market is all about their financial model rather than utilization or technology under the hood. So the idea is to give an ability to the customers to focus on their brand and to utilize the banking agency, APIs, accounting, routine, payments through the APIs by utilizing the existing infrastructure. And then it allows, another thing, it allows for non-bank entities to integrate financial services as the digitals, etc., etc. So right now we see this example because there are a lot of non-banking institutions, they have a banking functionality and ability to attract customers. Like one really good example, no one in banking sectors or financial technology is taking a look on the delivery services as their rivals. But what is happening on the MENA region in UAE, you can see that Talabat is basically utilizing the banking infrastructure. Right now they're offering cards inside of the application. You can do the cashbacks with the card. It's the moment when they will start utilizing the accounts directly from the applications. And same is happening with other platforms like Apple and Google. Those giants actually taking the part of the financial industry but not being regulated and by not positioning themselves as a financial service. Because with Apple Pay, you have an ability to do P2P payments. You have actually the Apple Card that's facilitated as embedded banking into the platform. And I think banking as a service is the main idea that it's not eliminating the core banking needs. It's just fragmenting the market a little bit another way that certain parts can be served and certain are served different ways. And in the definition, there is a word software as a service. And I think by defining it really well, we can understand what exactly it means. And it means that the software is hosted and maintained by the service provider. And that's also the change, because we see a lot of examples like that into the history, once again, with the theaters. Because you are not doing the one-time payment going to theater, you are subscribing to service on the monthly basis, and then it's up to you how you utilize it. Some kind of similar is happening with the software, because 2 decades ago, we were buying software. You buy an Acrobat reader, you are buying the stuff and installing your computer. But if you take a look right now on the software that you're using on the local machine, usually it's a subscription service. Even the services like Google, Azure, AWS, they subscription-based. And that's the definition of the SaaS, which once again into the financial and business model for the BaaS. The general BaaS integration, it's quite simple, a generic one, but it gives really good understanding how it's done. So there is 2 different buckets where you have an accountability. Let's take a look on that example of electronic money institution. So you don't need to take care about the core banking infrastructure or banking infrastructure within your own infrastructure. You're basically building the pipelines into the vendor, and then utilizing those pipelines for facilitating a lot of financial processes like agency banking, account structure, etc., and can be utilized. And the advantage is that usually those banking as a service companies, they're quite good with the technology and integration with the new approaches. So why do we need the vendors like for banking? Because actually, it allows the companies to focus on the brands. And we see a lot of competitive examples right now. Like in MENA region, there is a huge boom into the digital wallets. So they kind of competing against the banking sector and even neobank sector. And it allows them to test, and that's really important because right now, the most critical resource that we have is actually time. Because you can buy a lot of things with the funds, with the capital, with the budgets, but what you cannot buy is actually the time. And when we're dealing with the red markets, when we're trying to reach the customers, time is really valuable. And another thing which is coming from that is actually that you need less time to test certain business models, reach your clients, and understand that it's working for you or not. So I think the positioning of banking as a service is quite good. And I think fintechs, they quite simple with understanding what is required. Like for doing that, fintechs are looking for a seamless digital experience. Like engineers talking to engineers, API should be clear, API should be digestible by the modern engineers, because if you go into COBOL development or you're utilizing SOAP, certain things might not be up to the speed for the development, which once again is required for us to test our business models and to be competitive on new markets. Another one is speed and instant transactions. Like outdated system or the system which were designed decades ago, they were not designed for mobile applications. They were not designed for real-time usage. And once again, fintechs are in demand, in huge demand for those functionality as a low latency performance, real-time transactions, approvals, etc., etc. And another thing, the market is growing once again. As I said, it's not competition for banks against neobanks. It's competition about the technology companies, technology giants, which are cross-border, and they after our clients to have an ability to serve our non-inclusion and accessibility for fintechs, which are small, because we will go into the example with the Clearbank, and it will describe a lot of things. So features of the BaaS, which I think we need to highlight, is actually agency banking. So a lot of fintechs, and I've been in those shoes as a MEI institution in United Kingdom. I participated and I've built dozens of Challenger Bank in 2018. And the issue is, which is not as a rule, which is written somewhere, as MEI, you actually have to have aggregated account, and it should be hosted in retail bank, like licensed institution. And initially we went into the Barclays, but the moment we opened the account, we knew that's a matter of time when our account will be closed, because those banks, they against the MEIs, they against the competition, and we need the agency banking. So BaaS, compared to retail banks, they providing agency banking, which is allowing financial operations for those MEIs or fintechs. What we need also is accounts, because we need to serve our clients in different ways to build new financial models, faster money movements and payments, the essential part. Sometimes the BaaS is including card issuing, but that's not an essential functionality. Definitely settlements and definitely reporting. So let's go into the BaaS projection. And another research that I've done is actually that European banking as a service market is growing really, really fast. So if we take a look, the market is going to be almost, I don't know, 5 times or 4 times bigger in 2030. And actually, there are a lot of challenges or a lot of developments happening in other regions. We can see that in the LATAM region, there are a lot of new banks which are replacing the retail banks, and they're showing really good growth. And that's once again, is possible because they're utilizing the BaaS possibilities. Let's go into ClearBank. So that's one of the cases which I would like to talk a little bit more. I know that tomorrow we will have the person from ClearBank, but I think it's a really good moment to understand what they done different, because ClearBank, it's a fairly new organization that has been registered in 2014. And the idea is that from day one, they were aiming to become the clearing house and full retail banking license. So we have really gray lines between an institution having the license, but also targeting the market, because they're not targeting for the end customers, they're not targeting SMEs, they're not targeting wealth management. They came and said, we're going to build the platform which is facilitating other companies. Like, once again, comparing my experience with Barclays, the moment that you open the account, you understand that it's going to be closed because you're competing against them. And ClearBank is totally different perception of the market and the future of the market. They say, we would like to be the first to step into the market by serving smaller organizations, because they need it. They need agency banking, they need clear, they need embedded banking. So in December 2016, ClearBank gained the banking license in UK, and actually from 2023, they become profitable. And last year they shown the year before they shown full year profitability, and it proves that their model is really good. So we can go into the numbers, and by their projection, by 2033, they will show the significant growth in the numbers of the payments in UK, because in United Kingdom they have a license and they facilitating faster payments, bucks and chops transfers, and they see right now that they have 1.2 million customers in the United Kingdom, and the aggregated balance is 6.1 billion pounds. So it's really big amount. It's about 10% right now of the customers' account which are opened in the United Kingdom. They actually opened in ClearBank. But as a customer, you might not understand it, because if you go to Elika Bank and open your SME account, you're opening in the Elika Bank. But this institution is leveraging the technology of the BaaS to deliver you the account, routing, all the functionality, which previously you might build different. And they're showing really good income numbers, and they're profitable, and I think that gives them ability to extend into the European Union, because right now they're proposing the same model in the European Union, and we'll go into that. So ClearBank functionality is simple, and I think simplicity is one of the hardest part, because I've been working with the software, and you can understand that if you see a lot of UI, a lot of functionality, it's complicated. Like, it's complicated to use, it's complicated to build business models, and ClearBank did differently. They laser focus on really simple functionality. So to utilize them, you have the authorization. You have an ability to integrate and build the pipelines between two institutions. And what they aimed initially, and it was kind of quite interesting for me, because if in 2018 you will compare ClearBank to Model or Finance, another BaaS solution, they will provide the card issue. But ClearBank said, no, we are going to do the accounts only, but we will do it the best on the market as a first-class citizenship for our clients. And that's what they do right now in the European Union. So they basically providing 2 types of accounts, the real accounts and the virtual accounts, and then an ability to execute the payments, T2, SEPA, and SEPA Instant, and reporting and reconciliation. So it's simple. It seems to be uncompetitive with the core banking system, because we can do a lot of things with that. but it works. And it's also quite easy in terms of the technology, because the integration is well known for engineers. It's not binary formats, it's not SOAP, it's not XML, it's quite modern APIs, which are well structured, well known for all the market engineers, which once again, it gives an ability to build a team which is cost effective, and it can get the results and integration much faster if you compare it to other technologies. And with the real accounts, it's quite simple. You have the structure which has your bank identifier number, you have mandated accounts which you have for your institution, and basically if you're opening real accounts for your customers, it's just adding up into the structure that is hosted with the Clearbank, and it works. So basically you're opening an account, you're keeping the balance there, and you can extend, but also they providing really nice functionality which is virtual accounts. In this case, the money are sitting with the segregated account, and you have an ability to issue virtual advance, which are used for getting the payments, but as a cash flow, they will be automatically collected on the segregated accounts, which takes a lot of efforts out of the shoulders of those MEIs, because they don't need to take care about proper holding of the accounts by the regulators. It comes out of the box. And transfers, once again, they're quite simple. You basically initiate through the API the payment, then the settlement request done by Clearbank to RTGS system, then it credits the bank, then it's settled. Once again, it's pretty simple, but it's so powerful for the usage. And what left? Like, if I'm going to build the MEI with the Clearbank in Europe right now, what is on my shoulder? It's onboarding orchestration, because how our clients are perceiving our brand is really important. That's a competitive advantage, that's a targeting on the specific generation. A lot of benefits are coming from that. That's definitely KYC ML orchestration. Sometimes client balance is needed if you're using several solutions, because in this case, once again, BaaS is not limiting you with the integration. What you do with the middleware shown on the scheme, actually what you do, you are integrating with the BaaS, but also you can, for instance, you can integrate with the currency cloud for cross-border transfers. And then you will do the balance orchestration, but you can keep the balances independently, like having multi-currency accounts or some virtual accounts there. You do the banking accounts orchestration if you support several regions, like Wise. They right now give an ability to open a lot of different currencies, and actually they orchestrate in between different regions the accounts. Card orchestration, because they're not giving this out of the box, notifications and back office, which is really essential. And that once again gives us to build unique business processes which are tailored for us and tailored for our customers' needs. But there is a question, who controls the data and what's about security? And that's why we will jump in the core banking system and we will take a look what is the difference. It will give us an understanding and ability to see what is the difference. Yes, in this case, we're not in control over certain data, but we're building this middleware, so it's on our understanding how to architect, how to collect and to protect our data, and how to make sure that those BaaS are properly working with that. So that's really important question, like which is your risk appetite, which is your risk strategy to properly build the data control and the security within your system. And coming to the core banking, just to put like proper definition what we're talking about here, the core banking system is usually a centralized platform which manages essential banking operations. And it enables the same functionality as a banking service, but let's take a look what is the difference. And there is a really nice recent report by Gartner about core banking systems. If you like, I can send the links for those reports after the presentation. There is a really nice magic quadrant with the different players on the core banking systems. And we will take a look on Infosys Pinnacle today as example, but there are a lot of players, and we see the challengers. It's like Engine by Starling, once again coming from United Kingdom, 10x Banking, Fintech OS, and we have leaders which are well known, well respected on the market, and they have a lot of customers and installations. But let's see into the Pinnacle, like what exactly it means in numbers. And Gartner estimates the total revenue for 400 millions and the workforce about 6,000 employees. And in this case, like what was critical for me to understand, what is the scale? How many customers are using? And that gives really good understanding. So 43 installations and 4 clients in 4 years. So the scale is also big, but we can really compare to the BaaS. So right now, if we take a look on the whole market, it's not like the space is dominant by core banking systems. There are a lot of customers, a lot of growth in the in banking as a service space. And actually, which is really interesting, the platform Finacle can be delivered as core banking system hosted in your infrastructure, but you can also utilize the cloud platform. So in this case, there is a gray line, like what is actually the difference between those two? And what I can see, once again, from the technology standpoint, we understand that core ClearBank is built with the .NET. It's primarily first for the engineers, but the core banking system, they getting up to the speed with the technology. And what we can see here, it's almost all the systems, all the platforms and tools which are utilized in cloud infrastructure. If we take a look, the cloud-first platform, cloud-first systems, they utilize the same. And what we can see is actually can be delivered to Google Cloud Platform, it can be delivered to AWS, it can be delivered to Azure. So the gray line is there, and I'm asking myself, like, what is the difference? Once again, the general scheme, and we see if we compare it to the previous scheme with the BaaS, that actually the core banking system logically sits with your infrastructure. It means that you are in control over the data. It means that you're in control how it's delivered, how it's supported. It also has similar integration. Sometimes you will need to build customware to facilitate your customer-facing application as mobile or as a web, because sometimes you will need to do certain out of the box, which is good. The banking as a service systems, they're not targeting customer-facing applications. They don't have APIs for any API levels to directly integrate into them with the mobile applications. They giving pure backbone functionality. With the core banking, it's getting bulky. And I think that's another question. If the system is more complex, it's harder to support, it's harder to control. And what is the reality difference in BaaS and CDS right now? So I would say that both are cloud native right now. So we have software which can be run on-premise service, which is required by the regulators, which is the case for certain financial institutions. But we cannot say that cloud is a difference, because once again, the software is delivered. I'm coming back to the first slides, like what is the digital? It's when we serve when we need, and when we have faster turnaround, and both systems are updated, they well supported, they do the security. And I think it's not even about the stability, because like just 5 days, the Barclay had an issue with the online banking and with the payment protection processing, because actually it doesn't mean if you're a large institution, you are using core banking system, that actually proves that you in control of your infrastructure. By having everything inside your company, you also have cases when something doesn't work. And it doesn't mean that certain business model or the approach is better or worse. It means that the things become so complex that we cannot take a look on all the moving gears and make sure that it works 100% time. So with the Barclays, we can see that it didn't work. And I think the difference is in pricing models, because in this case, what we see from the history and with the BaaS, they shifting into the subscription model or pay-as-you-go, because it helps to the fintechs and non-fintechs to jump faster on the market, to check their business model, to test what actually it works with the real customers, because as a financial institutions, we tend to think that we understand our customers. Like we know what is attractive for them, what are the benefits, and then we see wallets, other players coming to the market and eating the market share. And actually those two models as a subscription, as pay-you-go for the BaaS enables the customers to see better business models and go to the market faster. With the core banking system, there is also a possibility to use as a hybrid, like certain can be done as pay-as-you-go and perpetual, which is different with the BaaS. Like you cannot have the license with the ClearBank as perpetual, one-time payment. So I think the conclusion is that the difference is in the market, which is like both are targeting. CBS is going after the retail institutions, They trying to play on the field with the fintechs to provide them more functionality, but it's really hard by their nature. And BaaS is more fluent, more flexible, and both can be cloud-based and API native. And BaaS is highly flexible with the licensing non-banks. It's another thing which is really important because BaaS is actually using their license to provide the embedded banking, which once again makes an ability to certain institution to try new business models and come to the market and be more competitive and be more innovative. And BaaS is usually priced as SaaS, as OpEx for neobanks, and CBS pricing is upfront, which is CapEx. So it's another difference. And I would say that there is no winner because the market will be fragmented. What I think in upcoming years, we will see how financial services, they coming into our life more and more, even if we're not asking for that. Because with the ClearBank, one of the discussions that I had in last quarter, that actually one of the project with the ClearBank to offer Netflix accounting for reviewing the video. So basically every time when you're viewing the series, there is an account which is calculating how a specific producer of the movie or the series will get a specific payment. So even if we tend to think that we are competing in the same market, it's not happening. A lot of things are evolving, a lot of things are appearing on the market, and I think it's a good place to be here because we have a lot of possibilities. Technologies definitely give us much wider possibility to compete on the market and to approach our customers. So there is no winner, and the market will be more fragmented with the different niches and different approaches. So if you would like to hear about more like fintechs, I have a podcast, and you can please join and take a look on our videos and our discussions. And thank you for listening to me. I think, and I will be glad to have the feedback from you guys if you have certain questions or comments. And if you don't have a possibility to ask questions right now, please use those channels for reaching me. Thank you so much for your time, and it was a pleasure to discuss this topic with you today.
Thank you. I'm sure there are quite a lot of questions, at least I have a few.
Sure.
Let's maybe start with,
Yeah.
actually, you mentioned this is the banking as a service for offering for fintechs.
Yeah.
I mean, it's clear actually for some smaller companies, but is it something that could be, and under which conditions, interesting for banks as well, who are considering transformation, and what would be actually the way to transform their core banking systems?
It's because, like in Tolstoy, every family is happy in one way, but every family is not happy in different ways. So in this case, the digital transformation, I would say it's because certain processes are not working and bank is not happy with something. And usually it's pretty unique for the organization because depending on the structure, on the market, on the regulations on this market, different conditions should be met. Like I have, in my experience, a lot of cases with the ClearBank, like Alika Bank. And they did it to get to the market faster for SMEs and be more competitive. So they scratched away a lot of efforts on their shoulders to do the accounting and routing and certain functionality which can be utilized from the market. And they competed well, and what we see really good numbers into jumping to the market and actually growing the customer base compared to other traditional players on the market. Like they providing more sophisticated software, they providing more sophisticated user experience, and one of the things by having that is to utilize what is existing already on the market. So there are cases, we can explore what else is on the ClearBank. That's one of the solutions. Another solution in the European market is Solaris Bank. Like we know that a lot of institutions are using Solaris Bank, and basically it's BaaS. So I would say, I cannot name like the exact points, but if you take a look, there is a value proposition. Faster time on the market, cheaper resources for utilization, and well-known outcome. Because one of the things with engineering that I learned from my experience, when you don't have a specific thing and you need to implement, a lot of assumptions are involved. Like, we know that the team will be capable to deliver. We know that we assume that a specific infrastructure and specific structure will work for facilitating certain business models, but it's assumptions. And what we buy, okay, we might use less budget, but we have more risks. If you have vendors like BaaS, you understand that they way to structure the things, they way to deliver to the market, it's proven. Yes, you might potentially see certain issues, but they're less risky if you're building yourself or utilizing something which doesn't fit like as a cookie cutter for your case.
And when we talk about, sorry, maybe I'm jumping. When we talk about banking as a service, should we think really as a entire thing, so core banking, accounts, payments, whatsoever, or there are possibilities to carve certain functionalities which might be more relevant for us, or to make actually transformation seamless?
I would think about that as a framework, because in this case, banking as a service is literally banking as a service. So they're not providing finance as a service or financial technologies as a service. I would say what makes a ClearBank quite good case in United Kingdom, that actually they narrow down to really simple functionality. Like if you would ask anyone from retail, like, is it essential function? Everyone will say yes, but it's simple to achieve because it has been done for years with the different regions. But what I think is good, it's like Twitter. It's popular not because it brought something to the market, it's vice versa, because they took something out of the market. You can't write big text. And that's why it was so popular, it was so booming. So that's kind of the same process. By eliminating other elements, you're narrowing down to the specific functionality, like accounts. And as example of the Netflix and accounting for the previewing or viewing the videos. And in the same case, I would say we need to take a look as banking as a service and then think how we can become better orchestrator between different systems, because not even engineering, but digital experience becoming more complex. Like we have those seamless experience between mobile phones, web UIs. We expecting certain things which were not expected like even a decade ago. And what we need, I think, as organizations, to see what are the things which are done well on the market and become orchestrators by putting the right layers. Like usually the setup with a ClearBank, if we're talking about like B2C customer experience, is to have banking as a service, but also a really good partner for card issuing and properly organizing the balances between those systems. But if you split it, then it's much easier to achieve the functionality and make it really smooth for the customers.
I actually like the one thing which you mentioned for the ClearBank, that they were thinking how to, as actually their USP point, to say what small companies or banks or whatever cannot do or afford on their own, and actually help them with that, which is quite a good, in my opinion, rationale for the outsourcing. Especially banks are usually considering outsourcing to save money. Again, I was also mentioning that, to cover costs and whatsoever. And that's, in my opinion, very, bad motivation. Better motivation is to say, okay, what are our core functions? What are not supposed to be? Let's, simply take from the market something which is not our core to be able to focus on the core.
Yeah.
Good.
Just on ClearBank,
Yeah.
I work for ClearBank, so why do you think other people haven't copied the model? If it's so simple, why isn't there much more competition?
I think the answer is it's simple. Because we tend to think that simple things is easy to copy, but it doesn't work this way. It's a 3D object. Like if you see something beautiful, it doesn't mean that you know how to create it as a pictures. And I've been engaged with the ClearBank from 2018. Like my first experience was we did the form for contacts. We asked for the banking as a service, and the first answer was no. Like we didn't get an access. We started with the modeler, and then dozens got the reply from ClearBank, and we started the engagement. So I think that's what we see in other technologies or other industries. Simple doesn't mean it's easier to understand and easier to copy. And certain advantage that this company is first of the market, understanding that you need the platform and ability to really narrow down the functionality and get it done perfectly. So we have a lot of companies who are trying right now, but they much later to the market, and they don't have this proven experience how to simplify the things even more. Like as an engineer, taking a look on the API documentation for European market, like basically you have 3 types of the payments. It's so easy, but I understand it took thousands of hours properly analyzing, implementing, bug fixing, supporting all those systems. So simplicity is not, it doesn't mean easy to achieve.
Yeah, thank you.
May I ask a bit?
Yeah, sure.
I understand that BaaS might be an alternative or an option for fintechs or smaller or non-banks or neobanks, but do you really think it is an option for a traditional commercial bank, especially in the highly regulated EU, where you have a focus from the ECB, from the regulators and so on, to use your CBS to ensure your data privacy and all these topics? Or is it still difficult to change to a BaaS system for a really traditional, large corporate banking, for a corporate bank?
Thank you for the question. And I would answer it from not a technology perspective, because what I see in the industry, and especially in fintech industry, that's more about thinking rather than the tools that we have. And yes, it's really hard to come to regulators, change the things that are comfortable for them. But that's time. The things are changing. Like, we are having the system which we didn't have before. We have competition which we didn't have it before. And with the United Kingdom, it's a good example that actually traditional retail banks, or like banks who are targeting SMEs, they're utilizing ClearBank, and there is no question from the regulators. Yes, that might be certain adoption time and convincing time, but it's not about the technology. We used to have, like, once again, we used to have different technologies, television, as theaters, and no one is asking, why do we need a streaming service? And I think it's the same will be with the regulators. They will acknowledge certain things that they are already on the market, and there is no way to say, okay, I don't like you, that's why you disappear. We will need to educate people, we will need to explain the reasons, and then it will happen. It's not about technology, is it hard? Like, believe me, a lot of things are hard if you don't have an experience with that, but we still managed to get here. We have certain things which 50 years ago were not even imaginary. Like, you're flying in another country, you have a virtual card with another currency, with the real-time notifications. Those things appeared not because we have the technology, but because we changed the way how we think. And perception, I think, in all industries are playing a major role. Like, if we change our perception of the subjects, then we can achieve more. Yeah.
How would you transition from the core banking system to BaaS?
It's once again, as with unhappy families, like, you need to see all those points, what exactly it means, because we are not moving because we would like another word from another word. I have a really good example. If you take a look on the factories, like, people used to draw the schemas and blueprints with their hands. And what happened during the transition to the computers? If you take a look on the people who used to work in the factories for drawing the schemes and blueprints before the computers, by giving them a better technology, it will not become faster. So if we're trying to just replicate one system into another one, maybe there is no, like, need for that. But I would ask differently, like, what are the limitations that we want to overcome, or what the business functionality we would like to deliver on the market? Like, if I would say my personal opinion, like, I'm the customer of Wells Fargo and Bank of America. And what really frustrates me that as a customer, I cannot even open saving accounts online. Like, I have really good applications which are facilitating me with the everyday functionality. But if it comes a little bit left, a little bit right, then you need to go to the branch. So I would ask myself what we would like to achieve as an organization to deliver to our customers better, more instant access, more functionality, and then take a look, is it achievable with the core banking system? Because they're not sleeping, they're doing the things. So I'm usually, and that's one of my roles sometimes with the consulting clients, is asking proper questions, like, why are we doing that? And how we will estimate that the transition is done well? If we just replicating one system to another with all complex process, with a complex synchronization, we don't have real time, we do the settlements and certain things on the daily basis instead of real time, that's not a good way. But if we're rethinking the system, we're going to provide an ability to open accounts in real time from your application, to open account, to do the transfer, to close an account, that's maybe a good choice.
So you're not recreating the situation that we're in right now. So traditional bank, the challenge within a traditional bank is we've got an infrastructure that it's difficult to get rid of. And if we start investing in it, and I have got thought about a place for BaaS, so I'll get to that. But if we are to use BaaS, then we're just going to have two of something. We're going to have BaaS, and then we're going to have a core, and BaaS will do something quicker, but it's an additional risk, because rather than having everything in one place, and we're monitoring the risk on here, now we're splitting things, we're increasing cost, and then we've got to look to manage efficiencies in the same way that we always do. So I don't quite agree with kind of the scenario that he was getting to, but I think that where BaaS could potentially have a space in the traditional banking, and I've got another question of you off the back of this, is piloting. So if we've got something that we don't want to disrupt the core banking system before we know that something works. BaaS, from what you're describing, sounds to me like we can just plug in and maybe plug out. So it allows us to test the concept on mobile apps, that customer interaction piece, so the things that are sitting on top of the core platform. Make sure that that is giving the look, the feel, and the outcome that we want. And then if it does, then we can spin that around and then attach and build it into our core banking system. I think that's where I would see BaaS and traditional banking, because we have to do something with our core systems over time to get the efficiencies that fintech have, but we can't just blow up all our branches, we can't just blow up all the core platforms. Now my question of you is, how easy is it, once we've connected, to disconnect that infrastructure? Is it that simple as kind of plugging?
Two levels, because if you are not hosting, and you are not hosting infrastructure in this case, you don't have any additional actions instead of just disconnecting the business functionality in your code, because you don't need to take care about infrastructure, deployment, whatever. It's not sitting and not generating the cost. Another level is legally how you are structuring the contract and what are the terms there. But I would say it's much easier. And once again, one of the business model is pay as you go. So for certain cases it might be. And coming back to the complexity of the change of the core banking system, I'm a big fan of Atlassian products. They're quite good. A lot of people are using Jira, Confluence, etc., etc. And what I find really fascinating, there is a ticket from 2004 which is asking for different permission scheme for the field. You have a ticket, you have a field, and you would like to limit the visibility for people. So it's been 21 years, and they still didn't deliver it. They came in 2005 and said, oh, it's really complex. We will think about this later. And later, in 21 years, it's not delivered. And the software is really great. They have the budget, they have teams. So what I've seen in my experience with the transformation, you don't need to think about core banking or BaaS. You need to think what you want to own as a business. Because and that's why I'm showing this slide. What is actually the business of your middleware, what you would like to know about your customer to keep it. The way how I did it before, it was the plugins for the systems. Your primary source is your system, which is properly designed for your business, for your understanding of the strategy, but then you're plugging the vendors. And I've done that even with the ClearBank. We built our finance, we built the integration with ClearBank, and as an architect, I can do the feature flagging to say, okay, 50% of my customers onboarded today will go into the specific system. So it's not system bound, and the reason or ability to do that, how you think what you own. I would say that's some kind of key. There is a lot of heavy lifting, but that's the case. Yeah.
May I ask you what are the SLAs in case of update, in case of processing?
I think I would prefer to not answer this question because it's quite specific to the vendor. So I think with the ClearBank, there is a person who can help you. But that's once again the communication. If you contract team, if you have a specific needs, there is always a chance to discuss, and companies are looking to adopt. So that's a communication.
But there are some.
Yeah, definitely.
Yes.
There is no other way to survive in our market.
Obviously, it's a contraction. But I think it's actually, Wolfgang, your question and partially yours as well, are boiling to the main question, what is and what you want to have as a core business. I mean, in the case of traditional bank, which is here for hundreds of years or whatsoever, I wouldn't consider taking out the core system or even banking, because you are the one who could potentially provide that kind of service as a additional business model to other banks, right? And providers as a such, so this is this example of the clear bank. So their niche was to say, okay, which companies cannot afford something like that, and let's give something effective, good enough, simple enough, and affordable enough, which don't they have to pay the whole infrastructure. Companies like Raiffeisen and Erste, they have it already, and in my opinion, they should consider the opposite direction. Consider, okay, we have it already, we sit on it, we have knowledge around it, we have people about it. Why shouldn't we offer something like that and maybe have additional, revenue stream besides the banking itself? Any other questions?
Yeah, sure.
Yeah, please.
In the 2000, I started working in Direct. It was very disruptive bank because we had no channels, but we didn't have branches. We have only call centers and internet at the beginning of it. I think it was very disruptive as this concept of BaaS. And my question is about, okay, because this is like a step forward, no? I move for a step in advance, okay? Not forward, in advance. So, but what is, because in that period also there were in India people, companies, right, gave similar services, okay, I outsource my back office service or my core banking services, okay, not based in technology, more based in human resources, okay. So, but really, is what you say, the understood problem is like I have a bank in my pocket. No? Okay. Simplifying a lot is I have a bank in my pocket. If you want the service like a bank, here is it. It's a packet. It's a closed packet. You can customize and then it's a packet. But why do you think that the traditional bank, retail banking or commercial banking, can do the same? Imagine I can. So it's thing of the most. I have the bank already.
Yep.
I can simplify, I can create a packet with like a present we put, and we did it, for instance, we did it in Italy, we put a private bank, it's something similar. The other point is, okay, I have to customize regulators, I need a bank license in every country, but what is the difference, or what is your value, because in the bank, for instance, we have been said, we are both working in traditional bank, we can create a packet and deliver in any country. What is your advantage here?
Are you asking about the BaaS or advantage for banks coming into this space?
Yes, the second one.
The second one, I think, and once again, it's fragmentation, because if we take a look on Santander, they actually already in this game, so they, I would say, another competitor to Clearbank in the United Kingdom, and they quite after the other markets because they have license across the world, and they position their platform, I forgot the name of the platform, but they have the banking as a service platform, which is the competitive advantage to the BaaS, that actually they have the wide world spread licenses, and they really can connect like different regions that you would not think, like European market with Peru or whatever. So I think banks, when we will change our perception, we will understand that there is no like B2B or B2C market. We have a huge possibilities to serve fintechs with our technology, like maybe the case with the core banking. It's not the question, do we have the BaaS or core banking system? Are we targeting the companies which are looking to have BaaS as a retail bank? Because if you take a look on the license of the Clearbank, it looks like a retail bank. It's clearing house, it's full licensed institution. What is the difference? The difference is in perception and the targeting of the market. So I think it's a huge revenue opportunity for the banks who will grasp. And additionally, I think it will help internally, because I was working with NatWest, and at a certain point we needed to integrate with direct debit. And I said, let's use your API. And they said, huh, are you joking? No, we're going with the Stripe. So sometimes internally companies, they don't utilizing this possibility to structure platforms inside of their organization to power up the internal functionality. In this case, one branch of the NatWest would literally go to the third party to pay the money because they understand that they will not be able to satisfy the needs of the business product with the internal tool. So maybe there is even a space to become the BaaS inside of the bank to serve the needs of the other departments, because the organizational structure of retail banks is different. And that once again gives an ability to do certain products within the company. So I hope I answer your questions. Yes, it's possible. Yes, I think those institutions should perceive that. But once again, it comes with the perception.
I think we are right on time. Igor, thank you very much.
Thank you.
Excellent
It was a pleasure.
presentation. Very, very informative. Very
Thank you so much.
interesting.
It was a
I hope
pleasure.
Lunch will be
In discussion.
effective in discussions.